After the interstate supply of goods and services, it is what? Return of goods. So, what is the return of goods in general? Let us discuss these things later on. Before that, I would like to tell you what is returning. What is returning? Two things: returning, going out, returning, coming in. So, two types of returns are there. One is known as return outward, another is known as return inward. So, in case of the return outward, going outside, it always comes under what? Outward. Comes under what? Purchasing of goods. When we purchase certain commodities to my company, if there is any damage, if there is any defect, if it is not according to my order, then I have to return that commodity to the supplier once again. And that returning of goods is known as what? For me, I am customer, I'm a dealer, I'm a trader, whatever it is, I'm a businessman. So I am purchasing the goods from somebody else. I find some of the goods damaged or defective. I want to return it back to the supplier once again. That is known as what? Return outward. So that means purchase and return outward interrelated. Same way, that is what I purchased. I am supplying the goods to somebody else. I am supplying the goods to the customer. That is my sales. And the customer finds some damaged, defective product there. The customer will return back the goods to me. That means that goods comes to me once again. I have sent it. Once again, the customer return it back for certain damaged product, defective product. That is known as what? Return inward. So I am mentioning two things. One is related with the purchase, another is with the sales. Purchase means purchase, goods comes in, return outward. Purchase and return outward interrelated. Sales means what? I am giving certain commodities, the customer is giving it to back to me in case of any damage. So with the sales, return inward always relates. Sales, return inward. Purchase, return outward. So now we have to discuss about the return of goods definition and the scope. Definitely there is an impact or treatment of GST for the return outward as well as for the return inward. Now let us go for the return of goods. That may be outward, that may be inward. Return of goods refers to the goods returned by the recipient, buyer or customer to the supplier. Okay, customer to the supplier. That means it is inward, return inward. Why the region? Region is, it may be a defective goods, there may be some defects on it. It may be a wrong goods, not according to the buyer, what he wants. It may be a excess supply, whatever the buyer needs more than that. We are supplying, maybe a case. Packaging damage also may be there. That means defect and damage, D double, D square, defect and damage may be there. That is known as D square. Wrong goods, it may be sometimes. Whatever the buyer wants, it may not be according to that. Excess supplier. So these four things only we have to remember in case of the return of goods. It may be double D, damage, defect. It may be a wrong goods, or it may be a excess WE. That is wrong, another is excess goods. So these are certain causes, these are certain reasons why generally the buyer return the goods to the supplier. This is known as what? Return of goods. Its meaning as well as the reason behind it, why the return takes place. Why the customer return the goods to the supplier? Very easy it is. Mostly in case of the online purchase and offline purchase also, sometimes we return the goods only because of these reasons, right? Next, see, return of goods and GST. So we have to know What is the treatment of GST for return of goods? Return of goods everybody knows. But what is the impact? What is the treatment? Under GST, return of goods may involve reversing some input tax, returning back input tax credit or adjusting output tax. Return of goods generally divided into two types: purchase return, sales return. But what is the impact of GST here? Mostly in case of return of goods, what happened? GST is reversing. It has been returned back along with the proportionate amount of the goods damaged or defect, which has been returned back. Or sometimes what happened, it has been adjusted. Two things may happen. The GST treatment, there are two treatments in case of the return of goods. The first treatment is what? It may be a reverse tax. And second is what? Second is there may be an adjustment for the output and input tax. Output and input tax. From my head, I may return the goods to the supplier. The supplier may return the goods again to me. So in that case, there will be an adjustment of GST. But it is if it is only one side return, then there may be a reversing of GST. So this is the treatment of the GST in case of the purchase as well as in case of the sales of goods. Right? Next, purchase return. Once I say it, one is purchase return, one is sales return. Let us see what is written here. Purchase return meaning when the registered taxpayer return goods purchased, usually from vendor. This is purchase return. When the registered taxpayer return goods to the purchased vendor, that is the usually from the vendor. Okay, I'm purchasing the goods, then I'm returning back to the vendor once again, supplier once again. That is known as purchase return. ABC Limited supplied 100 laptop to XYZ Limited, somebody else. On 5th January, on 8th January, XYZ Limited returned 5 laptop due to the bad conditions or the damaged condition. So GST charge what? 18%. It will be calculated by considering 18% GST only at the time of returning the goods and services. If he return it back, he has purchased 100 laptops. So he already paid 18% GST for that 100 laptops. Now he has returned 8 laptops back for the damaged or defective product. So in that case, whatever the laptop he has returned, on that 8 laptops, the GST has to be calculated and that GST has to be returned it back to the person once again. That means total value of money along with the proportionate GST has to be calculated and return it back to him. So this is all about what the tax is treatment for the purchase return. This is just an example. This way it happens when the GST has been returned. Now let us discuss the accounting or tax treatment of return of goods. What are the treatment of tax in case of the return of goods? What are the rules? What are the formalities comes under the return of goods? If return is made, two things are there. One is within 6 months, another is after 6 months. The rule is different. If it is within 6 months of the purchase of goods, it takes place or it happens. The return should be within 6 months from the date of the purchase. Then the treatment is different. If it is more than 6 months, the treatment is different. Of course, the facilities are there for the beyond 6 months also, for 6 months and more than 6 months also, but the treatments are different. If it is within 6 months of the purchase of the goods, the return takes place within 6 months of the purchase, the tax liability may be reversed based on the ITC originally claimed. So it depends on the ITC originally claimed, input tax credit. That is the input tax credit originally claimed, it depends on that. So whatever it is, if it is within the 6 months of the purchase, there is a facility that the tax may be reversed back once again on the basis of the amount of the money returned or damaged. So it is one of the policy. And second accounting treatment is what? What happen if it is more than 6 months? So if return is after the 6 months, then what happened? The tax rate at the time of return may be considered for the adjustment. So tax rate may differ. Today, if it is 15%, tomorrow it may be 12%. Day after tomorrow, it may be 16%. So the tax rate every year or sometimes every after 6 months, 3 months, it has changed. So mostly in every financial year, we can see the changes in the tax rate. So in that case, what happened? In case of the purchase return, up to 6 months, even if it is change also, the original amount, original tax will be considered and accordingly that amount will be reversed. But if it is more than 6 months, that original amount will not be considered. It is very clearly mentioned in the accounting treatment of GST in case of the return of goods that if it cross after 6 months, then definitely the revised tax shall have to be considered. It may be more, it may be less. So what has been said that if return is after 6 months, then the tax rate at the time of return may be considered for adjustment. But here, let me mention one thing to you. If the tax rate is more than the original value, then it will not be considered as because only the list of the tax only will be considered, least amount. Right? Next, also recorded via a debit note. Debit note is prepared by the supplier for returning of goods and services in the books of the purchaser. So this is always prepared. It's a document. Debit note is a document. It is prepared by the supplier. In case of the returning of goods, it is always prepared by the supplier and give it to the buyer. That this amount of this quantity of goods has been returned due to so and so reason, and the tax has to be paid for this much. So entire information regarding the return of goods are there in the debit note prepared by the supplier for the buyer. Understood? Because I'm purchasing goods, I'm returning back to you. For that purpose, supplier has to make that note and he has to return back me the amount of money or else he has to adjust it in the books if it is more than 6 months. More than 6 months, mostly it is adjusted. Even though it is not adjusted, it should come according to the tax rate on that period of time. So this is the two different slot which comes under the return of goods, under the treatment of tax payment, under the return of goods and services. Fine. So next is what? Sales return. Till now we have discussed about the purchase return where the debit note has to be prepared, where the 6 months, 6 months, before 6 months, after 6 months, the accounting treatment we have discussed. Now let us go for the sales return. As I told you, once we sold out the product to somebody, some damaged, defective products are there. The customers may return it back to me, which is known as return inward. When sales takes place, return inward also takes place. So this return inward is known as sales return also. Sales return when the purchaser return goods to the supplier. Purchaser means I sold the goods to the customer. Those are the purchaser. I'm the seller. They return me the goods back. That is sales return. The supplier accounts for such return by issuing a credit note. Just now we have discussed about the debit note. Debit note comes when there is a return outward, purchase return. But in case of the sales return, always the credit note comes. Sales return. This will be considered in the credit note. The supplier must reduce the output tax liability accordingly. Accordingly, the supplier should reduce the output tax liability. Okay, so same way we have to reduce the tax liability. Once we sold the goods, the tax was more. We have already calculated a tax, and the buyer has already paid the tax to me as a supplier. But when they return the goods to me, I have to deduct that tax also at the time of returning if there is a payment policy, repayment policy. Then reverse policy. So in that case, the supplier has to deduct the amount, proportionate amount according to the goods returned back. Right? That GST has to be deducted. So this is sales return. So effect on ITC, input tax credit, output tax and return. Effect on ITC, output tax and return. What are the effects? Returns impact input tax credit for purchase return and output tax for sales return. Number one, point number one. What are the effect? Supplier must adjust output tax liability. Purchaser must reverse or adjust ITC. Next, in GST return, the details of credit notes as well as debit notes, which we have just now discussed, and return must be disclosed, especially in the outward supply tables. Next, if errors, any mistakes, omission, if you forgot to put it, and discovered later, not in the time, later on you have discovered, okay, there is a mistake. Rectification must be made in the return of the period in which error is noticed. Subject to time limit, very, very important point. If it crossed the time, then no rectification of error will take place. So these are the what we got effect of tax, effect of output tax, effect of ITC in case of the tax payment. And lastly, if there is any errors and omission, of course, the buyer or the seller, the supplier can rectify in case of any error, but it should be within the time limit. Now, what is the time limit? It will be decided by the government, it will be decided by the taxpayer, it will be decided by the supplier, and it should be according to the rules and regulations given under the GST Act. So this is all about the effect of GST, effect of account and tax in case of the return of the goods and services. Right? Next, key takeaways and points to remember. So what are the points till now we have got and what we have to remember? What are the points? First point, return of goods is an integral part of properly computing GST liability and ITC. That means return of goods we cannot ignore. It is an important part of the GST calculation. As because the GST is calculated on a total amount of money supplied. If return takes place, definitely the GST also has to be considered. Secondly, always observe the time limit, that is the 6 months rule for return and reversal. This 6 months rule. Before 6 months, after 6 months. Document properly via either debit note or via credit note or supplementary invoice. This documentation at the time of returning of goods is mandatory. Must. They have to prepare. They have to submit along with the return of goods. Where debit note is required, debit note will be prepared. Where credit note is prepared, credit note has to be prepared. Where the supplementary invoice is prepared, that means in spite of the original invoice, you have to prepare a duplicate, another invoice with the returning of goods. That is also sometimes may take place. And in GST returns, always declare outward supplies including return, credit notes, debit notes, etc., etc., etc. So this is all about the GST return, how we can return the goods and services.